Hi, my name is Neil Weber with Tesla Solar, and I wanted to create a quick video that covers the 5 key points that everybody really needs to know if they're looking into solar. So, in this video we're going to be covering about Tesla Solar, who we are, how solar works, solar equipment, utility rates, and current incentives and financing options. So about Tesla Solar. So we're named after the father of all modern-day electricity, Nikola Tesla. His dream was to one day give free unlimited energy to all of mankind. And today, our vision is a reflection of Tesla's dream, to one day share free unlimited energy from our most abundant resource, the sun. And this is me. My name is Neil Weber. And my background, I started in roofing in 1992, and I grew to the area's largest roofing contractor. And in 2005, I was introduced to solar by installing solar on new homes for developers. And so far, I've been doing solar for 13 years now. And in our industry, that's like saying you've been around since dinosaurs roamed the earth. And today, I have developed over 12 million watts of solar. And there's 3 reasons that I mainly do solar. And these are them right there. This is Axel, Neil the Fourth, and Dylan. These are my kids. And, I provide for them, one, but most importantly, I am making a cleaner environment for their future while doing it. And we also are a sponsor of the 4 Ocean Project. And if you're familiar with them, they are the organization that is cleaning up the trash and debris out of the ocean and recycling it into these bracelets. So with each one of our customers that we install, we send one of these bracelets out, and I encourage you to look at their website here. They're at 4ocean.com, and the link is on the bottom left here. These are some of our 5-star reviews from Facebook, Google, and Yelp. And we are also an A-rated company with the Better Business Bureau, and we're accredited with the Better Business Bureau as well. So now we're going to talk about how solar works. So solar takes photons from the sun and converts them into DC electricity. Now we can't use DC electricity to run our appliances in the home, so we run it to this box that's called an inverter. And the inverter, what it does is switches DC electricity into AC electricity for use in your home. Now any surplus that's not being used during the day will get sent back to the utility company. So now we're going to talk about how net metering works. So we talked about 1, we're making electricity in DC. 2, we're switching it into alternating current to use in the home. 3, we're going to use it in the home, and whatever's not being used is going to go back to the grid. So with net metering, they're going to install a new meter, and it's called a bidirectional meter. So now we need to regulate how much electricity is being sent back to the utility company, and it's going to build up a credit during the day with this meter as it gets sent back. Now in the evening, the sun's going to go down, but we're still going to have that credit we made from earlier in the day. So we're going to use that credit during the evening, and that's basically how net metering works. Now there's 2 net energy metering programs. We abbreviate it to NEM. And there's 2 rates that they charge for the electricity with NEM. The one is peak rate, and this is also off-peak. Now this was the original NEM when it came out. So sunshine would come down during the day, send it back to the meter, and the utility company would credit us at peak rate. So we would get top dollar for our electricity that we sent back to the utility. Now this would happen all day long. And then in the evening, we would buy it back from the utility at the off-peak rate because the sun is down. And in this scenario, for this illustration, we have, if we're sending X amount of energy back to the utility and getting a peak rate for it, we could end up with a $458 credit for what we generated. Now we're going to subtract what we used, but we bought that at a lower rate, and that was at $327 because it's the same amount of energy, it's just at a cheaper price. So we could end up with a $130 credit. And this is how solar worked with NEM 1.0. So the utilities changed this last year to NEM 2.0A. So now they changed the peak rate, and off-peak remains the same, but they changed the time. So now when solar is out for a portion of the day, we're going to get credited at the lower off-peak rate until after 1 a.m. Now, or excuse me, 1 p.m. 1 p.m. until the sun goes down, we're going to get peak rate. But as you can see in this illustration, it doesn't give us the same advantage that we had with NEM 1.0, because now we're going to buy back in the evening from, let's say, 5 to 8 at the peak rate. So this could end us up with a $131 bill. So now there is a way there's a solution for that, and that is batteries. So batteries, if we charge them from the solar during this period before 1 p.m. from the solar, and then we discharge them when the sun goes down until 8 p.m., then we're basically back to the benefit of NEM 1.0. So that's the solution. And we're going to talk about batteries in another standalone video, because there's a lot to cover there. But we're just going to cover the basics of solar right now. So the types of solar, we're going to talk about equipment right now. We're going to start with the modules. The modules, there's two types. There's monocrystalline, which look like this, and you can tell them because they have a uniform black color to them, and that is because of the way they manufacture them. They're grown with a pure seed crystal, and you get a pure crystalline structure. And what that does is it absorbs more of the photons and returns them into electricity. So these end up being the highest efficiency modules on the market. So these are the most attractive because they have that black color, so they're used a lot in residential installations. They have the longest lifespan, and you can put on a smaller footprint on your roof and get the same energy production than you can with the other types of modules. Best performance, and you could always tell them because they're a uniform black color, and they have a 25-year warranty, and they are a little bit more of a premium price than what we call polycrystalline panels. So polycrystalline panels look like this, and these have more of an industrial commercial look to them, and these are almost exclusively used for commercial installations. And these have a little less efficiency, but in commercial it's not as critical because you usually have a wide open area that you can put, you're not limited to space. They have this more commercial industrial look to them, a little shorter lifespan, lower performance, and they have this multi-blue shading color. They also have a 25-year warranty that doesn't have the same coverage as the monocrystallines do, but then these are less expensive. So the takeaway from this is I've seen recently a lot of contractors are putting in polycrystalline panels and not bringing up the subject, so you just want to be educated and make sure that you're getting a monocrystalline panel and they're not cutting corners here. You don't want to, if you're going to cut a corner, you don't want to do it with the modules, because that is the heart and the core of your system. So we talked about the modules, and the modules are what make the electricity in DC. Now we're going to convert that into alternating current with an inverter. The inverter, we use Solar Edge right here. There's two types of inverters out there. Solar Edge are optimizers, and these have a 25-year warranty. There's another very good product out there that does the exact same thing, just in a different way, and that's Enphase, and they are microinverters. So both of these come with a 25-year warranty, and like I said, they basically do the exact same thing, just in a different way. They both come with 24/7 web-enabled monitoring, which is awesome. You can see in real time, and once you get this, you will be spending time looking and seeing what your system does, because it's really a cool feature and very practical as well. Both of these optimize the panels so that if a shadow gets on one of them, it doesn't take down the whole system. Each one of the modules will run independently of each other. So what this does is allow them to all run at their maximum performance all the time. So we have been leading with the Solar Edge product, not because it's better performance, but they both have the same performance. But Solar Edge has one additional feature, and that is that if you are considering doing a battery in the future, which that's where the whole industry is going to go in the future, there's a module and you can just plug a battery right into these. So with the Enphase, you're limited on what your battery options are if you want to do that in the future. So we've been leading with Solar Edge. So now we're going to talk about the utility rates for a minute. And this is an article from ABC News talking about the State Public Utilities Commission approval by a 3-to-1 vote for an increase that will affect a lot of the heavy end users. And for the heavy end users, they're going to see an 80% increase in their rate. That is a big rate. It's going to affect 9 million of their customers between PG&E and Edison. And the link to the article is down on the bottom here. Now, that is not normal. 80% isn't the average or normal. The average and normal, if you look at it over history, is right here. It's about 7% between the IOUs, and that is between PG&E, SCE, and SDG&E. Those are the big three independently owned utilities in California. So that's the other ones are called municipalities, and they're smaller, like city or local utility companies. But between PG&E, SCE, and SDG&E, those are the big three, and 7% is the average. So now we're going to talk about what happens with a 7% increase over time with just an annual increase of 7%. May not seem like a lot, but we're going to see what happens here. So for someone that has a $150 electric bill, in year one, they're going to have 12 months of that is going to be $1,800. Okay. Now I'm going to go through this pretty quickly, but the year 2, we're going to go up to $1,900. Year 3, $2,000. Year 4, $2,200. Year 5, $2,300 a year for your electrical bill. So years 6 through 10, between that period, your bill will go up to $295 per month, and at 12 months, you're going to start out at $2,500, $2,700, $2,800, $3,000, and then it's going to go up to $3,300 per year by the end of year 10. So years 11 through 15, now the bill is $413 per month times 12 months. Starts out at $3,500, goes up to $3,700, $4,000, goes up to $4,300, and goes up to $4,600 a year. Years 16 through 20, your bill will go all the way up to $580 per month times 12 months. So that's $4,900 a year, $5,300 a year, $5,600 per year, $6,000 per year, all the way up to $6,500 per year. Now keep in mind that if this was something that was leaving our checking account and was going into principal payment on our mortgage or another investment, I'd be all for it, and that would be something that would be a very smart decision, But with the utility company, there's never been a situation where that money is going to return to your checking account. Once it's gone and it leaves there, it's gone for good. So with $760 a month going out times 12 months, and in the year 25. Now, you do this at 25 years because that's the warranty on solar, and we kind of do an apples for apples comparison. One scenario, 25 years staying with utility, and 25 years with solar. So year 21, we're paying $6,900 per year. 22, $7,400 a year. 23, $7,900 a year. 24, $8,500. 25, year 25, we're paying $9,130 per year for our electricity. So in this period, if you could pick a year to lock in the rate and never see another 7% increase, in other words, if you could call the utility company even and say, you know what, don't increase my bill any more, I'm good, I just want to fix it right here, no more increases, thank you. What year would you pick to lock it in? Year 1 at $150, year 10, 15 at $413, 20 or 25 at $760. So, I mean, the most logical answer to that question is to lock it in at equal to or less than in year 1, right? That just makes the most sense. So I love this part because I get so many different answers to this question. So just, you can take a quick guess, add up those numbers, and then take a guess at how much you will have spent at a $150 electric bill per month. How much do you spend over 25 years with a 7% increase? Let's see if you guess this number. I don't know if you can read that on the screen there, but your $150 month electric bill will turn into $113,848. So, what are our options? So we discussed locking in your bill, and there is a way to do that with solar. So that's option A. Option B is, stay with the utility, and there is 1/3 option, and people go, well, what about 25 years? I don't know if I'm, but is there a point where we're going to stop using electricity though? Within 25 years, are we going to use less electricity or more electricity, or stop using it? And I don't think there's anybody's ever chose option C. That, from my experience in doing this for 13 years, nobody's just said, I'm not going to use electricity. I'm going to make my own candles and get rid of my car. I'm going to use a horse and buggy. So out of these 3 options, I think we could all agree that locking in the bill with solar, not only for environmental reasons, but for financial reasons, it makes the most sense. So now we're going to discuss those rebates and incentives that are available. Right now in California, there is an energy battery rebate of 40 cents per watt. Now this is a tiered first come first served rebate. So at the time of the video being made right now, it's at 40 cents a kilowatt. And so for each battery that we're installing, that's the size on it. ESS stands for Energy Storage Systems. That's what they call batteries in our industry. But we can just refer to them as batteries. But if you see ESS, that's an energy storage system. And $39.20 is what they're going to send you a check back. So federal incentives. On top of that, there's a 30% tax credit. Now that can be used for the battery rebate, and it can also be used for the entire solar system. There's a 30% federal tax credit. So let's just say a 6 kilowatt system, which is kind of the average in California. If I took the highest and lowest and added them all up, 6 kilowatt system is going to run about $7,200 to $9,000 in a federal tax incentive. So that's for federal income tax. So you just have to make sure and check with your CPA, make sure that you have enough tax liability to use that. And you don't need to use it in the first year. You can roll it over for several years and use a little bit every year. But it is available, and you do get it if you go solar. You just have to make sure that you can use it and what they call monetize it. Monetize it just means turn it into money, turn it into cash. So these are how people go solar. So these are the financing options, and we're going to talk about that. There's 3 options here. There's a lease, which is about 10% of people go with lease. Now lease, the benefit to that is it's a quick application process, and you're basically renting a system, technically renting a system, but it allows customers that can't use that federal tax credit that we just talked about. If they can't use that federal tax credit, they're going to, the leasing company will take the tax credit and pass it through to the loan for the customer. So those are a good fit for customers that are retired and do not have any federal tax appetite. Financed ownership. Now this is about 80% of people that go solar do financed ownership, and that's where we get them qualified for credit and they own the system. And so they use one of our financing partners to go solar. About 10% of our customers go with cash, and these are, some people have 401k or money that they want to pull out of another investment, or a mattress in the back room with a bunch of cash in it, and they just want to put it into an investment that's going to yield them, because solar will yield you 15 to 20% return annually, which is very healthy, and that's risk-free because you own the asset. It's not putting it into some fugazi or make-believe investment that you don't know about overseas. This is a solar system on your house, and it's yielding you a tangible 15 to 20% return every year. So I'm going to take the cash and lease off here, and we're just going to discuss the 80% because that's what most people end up choosing. So financed ownership. So that's zero down, so there's zero money out of pocket, and we can finance batteries and solar together. Simple application process, just takes about 5 minutes to get you approved. You need about a 660 FICO score or above. Fixed low monthly payment, so this payment will never go up. You're going to own the asset. Every payment that you make goes back into your asset. It goes into something you own, so you will get that back. It's accruing equity for you. And rates are from 2.99%. So that is very, very low. I don't think anybody's going to be able to beat a 2.99% interest rate. 12-year to 20-year terms on the financing. So just have to, it's up to you if you want to save the most amount of money right now, and you would go with a 20-year term. For a 12-year term, if you're looking at maybe paying another, I don't know, $30 or $40 a month, and usually those payments can be right around what you're paying for your utility right now, but you're going to pay it off in 12 years. Your long-term return goes up significantly because you pay it off so quickly. So it's up to you if you want to save more money now or more money later. That's if you would go with a 12-year or 20-year term. So I hope I was able to answer some of your questions. And at this point, if you would like to get a personalized quote and get some more information, click on the link in the email or video below and get on my calendar. My personal calendar link is there, and you can set up a time with me, and I'd be glad to help you out. Thank you for watching.